Welcome back, RSM 308ers, Recreational Sport Programming. Uh, this time we were going to move from our marketing and sponsorship, and we're going to start talking about budgeting. And budgeting is an important part of any event, whether it's sport or not. You always have to come up with the budget for uh, your needs to help put that event on. So that's what we're going to get into today. And again, we're not going to spend uh, an earth-shattering amount of time on budgeting, just kind of a brief overview of budgeting, just to kind of reflection and how it applies to us when we do our sport programming. So a budget. We've all heard the term. What is a budget? It's basically just a financial plan, which provides you a way of estimating the types and amounts of financial resources needed to implement a program for a specific period of time. So it's a financial plan. So one of the things it's going to require you to do is research. You're going to have to research prices. You're going to have to do some comparison and look at how much it would cost you to put on this sport event. Okay, and so it's, I kind of enjoy doing budgets because it gets you kind of talking and looking at different amounts and kind of gets you excited about doing the event in the future. Now, when you do a budget, it's always done at least a year in advance. So if we were planning on doing an event, we would start planning that event a year out, and one of the first things we're going to do is the budget and looking at what we're going to need to run that event and how much each of those items that we need are going to cost. Now, a lot of times you can get items outside the budget. In event management, we talked about a resource attainment plan where you can come up with other ways to get those resources that you need. But a budget is for those important items that you must have and you're going to have to pay for. Okay. So one way of looking at a budget, it's a series of goals with price tags. What do you want to accomplish? What are those needs that you have for your event? And what are the prices that go along with that? Okay. And so that's what a budget is all about. It's kind of, all right, what are we going to need to have this event go on, and what does that cost? And it helps you put together a plan. And one of the things it also helps you do is prioritize the items that are most important to the success of your event down to the ones that are least. And so those ones that are most important are the ones that got to be in the budget. You got to pay for. They're also the ones when a lot of times what happens with a budget is you propose it to your supervisor, and your supervisor comes back with, yeah, we can do it, but I can't pay, as much as what you want to pay. We need to cut that budget down 10%. So those items that are least important to the overall purpose and goal of the event can be cut, whittled down, and the ones that you have to have are there. So it helps you plan that out as well. And so, like I said, it's going to require you to do planning and research to figure out what everything costs, and then do some comparison shopping. You don't want to just go with one quote because you might be not getting the best deal. So make sure you do your research. And sometimes when you do your research and you find these prices, you can do some negotiation to get those prices down or get more of what you want for the same price. Okay, so do your due diligence, do your prep work, and remember, this is going to happen at least a year out because you got to propose this budget, a year out, and have that money put together. Well, again, that's a lot of times if you're working in most agencies, they like to have that budget a year out. Okay. So what makes up a budget? Well, one of the things you have to keep in mind is the costs or the expenditures that are going to go out, and that's what you're a lot of times researching the budget. What's everything cost, and how much is this going to cost me? And then also you have to think about the revenues. What ways can I bring in revenue to help cover those costs, and then eventually, hopefully, make profit, depending upon what the purpose of your event is. So those two elements so you have your expenditures, and that shows the fiscal resources that are spent to create or produce your leisure experience, in this case, your sport experience. So, okay, you got your expenditures. We all know what expenditures are. And then the revenues are the income. How can we generate income from our events. And again, there's always creative ways to bring in revenue and different revenue streams to help you. Um, a lot of times, only your creativity is what hinders your ability to generate revenue, because people a lot of times are willing to pay and willing to pay for a lot of things that may seem frivolous, but they're willing to do so. Okay. With your expenditures, so a couple of things that you'll hear oftentimes when it comes to expenditures. There's operating costs, and those are expenditures for elements that contribute to creation of a program that occur on a regular basis. So the operating costs are a lot of times those things that help keep your organization in business. So operating costs are going to be like your lighting, your heating and air conditioning, your supplies such as paper and copying, telephones. Those are all a lot of times operating expenditures that you have to have in place to run your event, your programs. It'll also be supplies to put on the event, all those different things. Capital expenditures then are those large scale kind of items that you have to buy or projects that you have, like buying land or building facilities, purchasing cars for your agency, that they're not tied day to day. Now gas would be for the cars would be operating costs, but the actual buying of the car would be capital expenditures. And so those items are last 10 years or longer. So large scale equipment that has that life capacity, those are capital expenditures. Cars, land, buildings, capital expenditures. So when we're looking at our sport realm, what we'll be focusing on is a lot of times, more of the operating costs. Okay, but sometimes we will have those large scale purchases, and or buying facilities to help run our events, or more land to expand our operation. So, but these are operating is probably what you're going to come across more, particularly as you get started. Now, we can break it down a little bit further into those costs and look at direct costs versus indirect costs. And direct costs, think of as costs that are used to actually produce the event that you're putting on. So let's say you're putting on a single elimination tournament. Any of the costs that go and it can be associated and tied directly to that event, those are direct costs. So if I'm buying trophies to give to the winners, that's a direct cost. I wouldn't be buying those trophies if I wasn't having that tournament. Right? I'm buying that tournament or those trophies for that particular tournament. Okay. Direct costs could be the officials. I'm paying for personnel to cover those events. So that's direct cost. Okay. So those direct costs are those things that are specifically going to that program. If I'm renting porta-johns so that people can use the restroom at my facility, that's direct costs. Okay. So they're not shared with other services. They're tied directly to the creation of that particular event and that particular sport event that we're putting on. Okay. The other type is indirect costs, and this is oftentimes overhead. So overhead are those services that are provided or exist within the organization, and they can't really be tied to a particular event. So if you're running your lights, you're running your copying machine, you're running your telephones, you have cell phone costs, you have cars, those are all indirect costs or overhead costs of running the facility or and they can't be tied down to any particular one event. That's indirect or overhead costs. So whenever you do an event, you're your budget that you're creating are usually based upon those direct costs that are associated with creating that event. The indirect costs, they're handled by another element of your budget to help you determine. So you usually don't have to worry about that. You just have to worry about those direct costs that exist. Okay. And how do we figure out the total cost? Well, it's the direct cost plus the indirect cost. And some agencies will ask you to absorb some of the costs or build in some of the costs to cover the indirect costs or the overhead into every budget. So they might say, add this amount to your budget to help cover the indirect costs. Okay. So just give you a heads up, they might ask you to do that, just to share the issue in that way. If you're trying to create revenue from your event, you're actually also helping to cover those indirect costs. Now on the other side, we have our revenues and our revenue sources. And our revenue sources, again, we said creativity a lot of times is the only thing that separates us or can hinder our ability to create revenue. But there are some classifications where you're going to get your revenue sources. Okay? And those four sources: compulsory, if you work in government-sponsored recreation. Government-sponsored recreation is usually supported by tax dollars. Okay? So, if I paid my Horry County tax not too long ago, and in my Horry County tax is a specific section for recreation. So I'm paying part of my tax dollars, my property tax goes to covering recreation within the county. Okay? So it helps to generate revenue, and so it has a little bit of buffer there to help cover costs because it's a government entity, and so it has that taxing element to it. So a lot of times property taxes are one way they'll collect it. Special taxes, some towns and cities have special taxes built in to help cover recreation, and usually they take it from some of those questionable pursuits that people do, like smoking. Smoking's bad for your health, so what can we do with part of that money that we generate from cigarette dollars is put it back into recreation and health issues. And so recreation a lot of times gets the benefit of that. Chicago is a great example. If you're from Chicago or been to Chicago, if you go to any of their amusement parks or theme parks, or you go to any of their professional sports teams, there's quite a significant tax that's built on every ticket, and that tax goes back to recreation in the city of Chicago. So last time I heard, I think it was like 33%. So there's an added tax on the ticket price, and that goes back into supporting parks and recreation in the community. So taxes are one way if you work in the government sector. That's one way. So City of Myrtle Beach, Parks and Recreation, they'll get the benefit of tax dollars to help support their programming and their sport operations. Earned income is anything that's realized through fees and charges. Okay, so again, this is a way that a lot of agencies make their money is through this earned income. They charge fees. Hey, we'll put on this service. We'll provide you this opportunity to participate in this sporting event, but you're going to pay for it, and we're going to make a profit off of it. That's the key, is we're going to make a profit off of that event, and that's how we pay our employees, and that's how we stay in businesses. We're going to make money. It's commercialized. Okay, I'm going to stop here, and we'll talk about some more ways to generate that earned income and these other classifications of revenues as we work our way through talking about budgets. All right.